Hey, what's going on, folks? This is Dmitry back again in the car. So in this video we're going to talk about Feds, inflation, and recession. Wow, well, it took me a second. But yeah, so recession and inflation. What is this going on in the market? Why the Feds are there? What's happening? How did we get here? Where are we going from there? Obviously, financially, very financially deep and rich discussion we're gonna be here, so stay tuned and we're gonna circle it out so all the necessity, all the craziness, all the agitation will be gone. Well, hopefully at least you will be having reasonable understanding of what's going on, why this is happening, and where we go from here, right? So yeah, let's say, who is the Fed, right? So this is primary guy right now in the discussion right now. So who are these guys? Feds, right? Or Fed, the Fed. So the Fed, or the ones that or people referring to in the news right now, is the Federal Reserve. You know, if you know it, awesome. If you don't, well, there we go. So it's Federal Reserve, and what do? They reserve and they set the rates, or prime rate, if you will, for mortgage providers or like lenders to base their ratings on. Meaning that, let's say you're going to get a mortgage rate on a house. You want to buy a house, you want to get a mortgage rate, right? So you don't pay cash, you're just getting a mortgage. So you want some other institution to help you out with financing of that. So, well, so to get the rate that you're getting, or to get the money, you will obviously pay the interest on it. So in those interests that are calculated based on the mortgage provider, however, whatever rate they put in, and then obviously the prime rate that they're getting from the Federal Reserve. So if that is a simplistic, and if it's not correct, correct me if I'm wrong, mortgage guys, because I'm not a mortgage provider, and the things that we're discussing here, I'm not a certified or financial advisor, nothing. So just saying that, but if it's incorrect understanding, let me know in the comments below. I'm happy to adjust my knowledge on that, and obviously everybody gonna be better with that. So with that in mind, with that disclosure in mind, so we're getting this understanding that the Feds, they're providing the prime rate, so to speak, and then there's mortgage providers that they're putting those ratings. So that's very simplistic. So that's how basically what we're talking about. But obviously, if you increase the prime rate, right, that means that the money that you're getting in the mortgage, or from the lending official or lending operator, I guess. So they will be costing you more. So meaning that you will pay more percentage, more interest on those money, right? So if you're getting, for example, if you're owing a mortgage, if you're having a mortgage, you're paying 3.5% now, or whatever you got it back in the day. Yeah, so that will increase that percentage because of that ratio, right? So prime rate and the regular stuff. So with that in mind, how is this influences the economy in general? Well, that influences the way that basically, as I said, as money, or to borrow money, becomes more expensive. It's because you as an individual, you're getting that, and obviously companies getting the same idea and perspective. Is basically same deal, right? The money getting more expensive to get. Obviously, if we expand in company-wide, it will be either projects, acquisitions, or any other things like that. So basically, yes, so companies getting more or less restricted in the way that they acquiring stuff, growing and producing. So what that means? So obviously, if a company's growth slows down, that basically slows things down. Every company, everyone, like basically in the economy, and that's where we're tapping into the stock market. So everybody, well, not everybody, well, most of the majority of the Dow Jones or Nasdaq, so the indexes, or like the companies with that stock market, or the public companies that own by the public, right? they are getting slowed down, so the prices of the market they are decreasing, right? That's the reason we see that fall in the market right now, and that's the reason basically one of the reasons, right? So that we're seeing that dramatic sort of waterfall-y looking decrease. So in other words, yes, and that's where we are. So that's what is happening. That's who the Feds are, that's what they're doing, and that's where we're getting. What's the reason they're doing that? Well, it's again recession versus inflation versus all the other stuff, right? So what we're getting here, they are aiming, and that's what I read in articles, they are aiming to slow down the inflation. That thing happened way back, like a couple of years back. I believe it was in 2008 in the house market, and the crash was that they were trying to, I think, reduce the access to the money again, so they were increasing the rates, and that's the reason. So that was the recession, and that's what we had in the recession. So right now we're pretty much into the recession already. Why would I say that? Well, think of it, just take a look on the market. So is it bad? Well, recession, in other words, or like in the basic definition, is the slowing down the economy. Well, it sounds bad. It's like if you listen to the radio, if you listen to the news, it's like bad, everybody's screaming bad, bad, bad. I'm not advocating for the recession in general at all, but so sometimes I would say, I would compare it with the, hey, you need a little bit of healthy diet right now. So if you eat more, you're just growing exponentially, right? And then right now the recession part of it, you know, even though it's bad, right? So the Fed is the reason that they're doing it is just they want to decrease the inflation. So that's the recession where it comes from, right? So obviously recession is a recession, slowing down the economy. Inflation is just the prices go up, and it's just the economy out of whack. Is everything just increased and prices get increased. So, well, that's the inflation, right? So the reason the inflation is here is because, well, there was paycheck was given, right? So it was already done before, right? Due to the very other circumstances, the pandemic going on and everything like that. So yes, there's that. Also, the other stuff, well, people were having money, obviously they were able to take other financial actions, utilize tools. Mortgages obviously were in place, the rate was the same, so money was really cheap at that point in time. So, and then we got to the point where we're like, okay, so companies coming back and things like that coming back, and obviously the situations harder than that happened when people, well, other organizations and nations and things like that, they started to having their disagreements and whatever you call it there out there. So everything pretty much became as a real big snowball effect where we are right now, right? So things getting slow and that, and gas prices and all that. So it's all contributes to the place where we are right now. Well, you ask me, hey, D, what are we gonna do, right? So what do we have to do? What do we got to do, right? So, well, if you guys involved in stocks, obviously it's very, you know, like obviously you're a free agent. Whatever you want to do, you can do. But you know that the stock markets are there. If you plan to invest right now, well, I don't think it's a good idea right now because the markets are really pretty much out of whack. But again, there is an argument that the prices are going down and they're bounced back, so there is no real uncertainty. But however, the companies that are strong, the companies that are big and that provide they're financially healthy, they will be there still, I think so. Yeah, because this is not really because right now what we're having, it's not normal circumstances, you know what I'm saying? So this is where we a little bit needs to be cautious on the decisions. However, the things like gold and silver and other things, they would be very effective right now because they are less susceptible to those market inflations right now. And gold will be gold, you know, things will be produced in there, and but they also can be volatile in the perspective. However, they are physical goods and they're pretty much can be invested in that sense. So as of right now, as of for me, like my personal investing strategy right now, I'm kind of hold off on seeing the decision, seeing that the market is going to go, what is the things that's slowing down. So as there are different factors, but the Fed's also doing their stuff, so they increase there. However, there is a possibility they can increase more. There is a possibility they won't increase anything. So what I'm saying is, yes, we're in a really troublesome time right now, but that's the reason we are there, and we just discussed why we do. So what we're gonna do in the future? Well, I would presume that if the things going the way they're going, we are not gonna be in too much of a trouble, because the recession, it needs to stop, because at some point it needs to stop and then let the economy go a little bit better and the way that it was going originally. So interest rates will stay for a bit the way they stay, right? Because so that they needs to slow down the economy. People need to have a little bit of more less money, and basically just slow down the economy in that sense, basically. And there's a lot of reasons for it. There's also printing money stuff, and there's giving money. And so even though it was like good, bad, whatever the camp you are, it's happened. It's already there. So what we're gonna do about it? Well, yeah, we're gonna continue to live. We're gonna continue on. So everything's gonna be all right. And yeah, so let's continue to do the best we can and just hang in there, and everything's gonna be all right. So I hope that, guys, reduce your stress level a little bit. So I hope that it was an encouraging video, and it was a little bit of new territory for me, but I hope you guys enjoyed it. So like and subscribe on the more videos like that. So, but yeah, that was the recession, that was the Feds, that was the inflation. So that was very interesting. Just trading was going on, so it's just going down. However, think of it as presenting a better other opportunity, right? So there's opportunity to get invest. So that, I remember that was the spike down when the COVID hit. Think of it that way, and then look at what happened, like literally in a few days later, or few like months later, so it skyrocketed back. So there's the option for that one too. So don't get discouraged, don't get agitated. Everything's gonna be all right. We're gonna get through this. So yeah, Dmitry out. So see you next time.